Welcome to Good as Gold, hosted by Nick Grovich, a show dedicated to helping you understand precious metals and rare coins, how to avoid the pitfalls when buying, and how to understand the inner workings of the precious metals markets. Have a question? Call our local office at 1-800-221-7694. That's 1-800-221-7694. Or visit us online at www.americanfederal.com. Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich with you. We're here live in Phoenix again today. So if you have questions while I'm on the show, call 602-324-1510. If you need the local office, if you have other questions, specific questions about your portfolio or questions you want me to ask and you're too shy to call live, you can call the office at 480-553-5282. So if you've been watching precious metals this week, you probably know it's been a pretty interesting week. Prices dropped quite rapidly this week. Some big drops that most people, it caught most of us unaware, a little unsuspected this week. So I'm going to talk about the precious metals a little bit, not as much about coins. I like to talk about metals when there's something interesting to talk about. A lot of times, the last year, gold's just been kind of plodding along, going between $1,150 and $1,200. Nothing real exciting going on, so it's kind of hard to talk for an hour about a market that's not doing anything. But today there's enough going on. I think I want to talk about the metals markets, Greece, China, some of the things that are affecting the markets in ways that a lot of buyers really didn't see and really didn't expect. And, it's affecting the markets in ways that most gold bugs, well, let me say that differently, in the opposite direction of what most gold bugs thought would happen with these problems in China and Greece. But first, let's have a couple of questions. I have to get my coin questions in. This week, I'm borrowing some questions from the Numismatist magazine. I was reading that this morning, and they had some in there that actually stumped me. So I thought I would try and stump you with them. So the first question, this is for a Silver Eagle. What coin holds the record for the longest uninterrupted mintage of the same design? So that means no design changes, no composition changes. Which coin has the longest run? And then if anyone answers that one, there's another good one. In fact, I'll give you the other one now too. There's one person whose likeness actually appears 3 times on one coin, and this is one I didn't know, so we'll see if anybody out there knows more than me. So one famous person, obviously they're on a coin, but his, and there's your hint, his portrait is actually on the coin 3 times. So give me either of those, and it's good for a Silver Eagle. And don't cheat and use the internet. Let me know let's see if you actually know the answers to these. I did not. So let's talk about precious metals a little, since it's been a crazy week. Gold hit a 3-month low, even with what's going on in Greece, which really surprised a lot of people. The Chinese markets were down 37% over the last 4 weeks. That's something else that's having a big effect on the markets. Normally, I think most gold investors would think that these problems in China and Greece would have a positive effect on the gold market. And instead, what we saw this week was we saw a pretty big drop in prices. On Tuesday, gold dropped 20%. Silver was down about $1. Both platinum and palladium fell right along with it. So it was a pretty big move downward this week. Now they've recovered a little bit since then, but they're still fairly weak. And so that's why I wanted to talk about that a little. There's a few things in play here. The one thing I've talked about before on the show is that sometimes you're just in a bear market, and so world events are interpreted differently. I've talked about this in different ways on several shows. I talk a lot about, back in the 1980s because, I keep telling people this feels exactly like it did back in 83 and 84. After gold and silver had hit their peaks a few years earlier, and the markets came down, and of course, dealers are, if we don't talk positive about gold, we don't sell gold. So it's a little bit hard to come in and tell you that we're in a bear market and tell you the negatives about gold. But that's how the market is right now. We've been in a bear market for about 3 years. And I think part of the problem here is we just simply haven't broken out of the bear market. So news that typically would be interpreted as a positive for gold is interpreted as a negative. I find that a lot of times the news doesn't dictate what gold does. It's just that they take the news and they spin it so that it explains which way gold is moving. It looks like we have a call already. Hi, this is Nick.
Hi, Nick. My name's John, calling from Nashville, Tennessee.
Wow, John. Great.
Listening to you online today.
Well, thank you.
I was going to answer your question as far as the longest mintage of the same design. I think that is the $2.50 Liberty Gold coin.
Okay. Do you know which years by any chance?
1840 to 1907.
You got it.
Yay.
You got it. All right. Now I have to ask you: did you know that, or did you have to look it up?
No, I cheated. I had to look for it.
All right, that's all right. Thanks for being honest with me, because it stumped me. I guess if I thought about it long enough, I would have gotten it. But I had guessed the Lincoln Cent, but
yeah,
the Lincoln Cent had a lot of changes.
You said it stumped you. I was like, well, there's no way I'm going to know it if you didn't.
Well, that's great. I'll send you out a Silver Eagle. Hang on, and Ashley will get your name and address, and we'll send that out. Thanks for calling, John, and thanks for listening from Nashville.
Thanks, Nick.
You bet. There you go. That's right. The $2.50 Liberty head they made from 1840 till 1907, 67 years. That's the longest run. This sidebar to the our gold report this morning, but I think most people, if they were guessing without looking it up, would have guessed the Lincoln Cent because they've made that coin since 1909. So we're 106 years they've been making it, but they had a lot of changes with that coin. The very first year they changed it because they had designer's initials, the VDB, Victor, I forgot his middle name, David Brenner. And so they changed it the first year. And then, of course, during World War II, they needed copper for the war effort, so they really couldn't afford to use copper to make cent coins, 1 cent coins. So in 1943, they made the Lincoln Cent out of steel. Those are steel pennies. They're not aluminum. They're not silver. I get people all the time call me and say, I have a silver penny. Well, they're steel. And then they changed the composition again after the war. Well, not after the war, but in 1944, and then again after the war. So there are a couple different compositions. And in 1959, they added the Lincoln Memorial and took the wheat cents off. And then, of course, lately they've had all different kinds of designs on it. I think they have 4 different designs on the penny now. They have Lincoln with the log cabin. They have one with a shield. They have his early years. So they've had a lot of different design changes on that coin. So that's kind of what threw me on it. I immediately went there because they've made the Lincoln penny forever, but they keep changing the design. So that was the right answer, the $2.50 Liberty head gold coin from 1840 to 1907. So now let's see if anybody gets the second one. Who's actually on a coin 3 times? Whose portrait is on the coin 3 times? So we'll see if you get that one. All right, back to the gold. So what I've been saying is, we're actually in a bear market. So it's going to take something pretty substantial to really turn that market around. I remember in the past there were all these rules. I mean, right now the dollar goes up, gold goes down. We've seen that rule get broken several times. You've had days where the dollar and gold go up the same day. And all that tells you is people are scrambling to get out of whatever currency, like the euro right now. They're scrambling to get out, and they're buying They're buying the dollar because they still trust the United States, and they're buying gold because gold is typically real money. That's gold's financial aspect. But gold right now is acting more like a commodity. So it's being pulled more by the commodities market than by the financial markets. And right after this break, I'll get right back to the gold report.
Once again, here's Nick Grovich.
Nick Grovich back with you. We're talking about the state of the precious metals market this week. And what I just mentioned is the one big thing, and it sounds overly simplistic, is that we're just basically in a bear market. And we just haven't broken out of that yet. I don't know what it's going to take to do that. I mean, you could have ISIS start blowing up oil wells or start moving into Saudi Arabia or, something like that. That would, I think, have a big effect on gold. One thing I heard on the radio earlier today is that Saudi Arabia, for example, is now doing a lot more business with Russia than the U.S., and the one thing that in itself I don't think hurts the gold market or helps the gold market. But if they decided that they weren't going to trade in dollars, if they were going to trade in their own currencies, that would be devastating to the dollar because oil and a lot of the commodities trade in dollars, and that's one of the things that props the dollar up. A lot of people know, I won't get too sidetracked here, but a lot of people know that there's been a movement to get rid of the dollar as the reserve currency, and that would, that's probably something that's coming, but it's not going to happen overnight. I know there's one newsletter, they've come out with 4 or 5 different predictions that, with specific dates that it's going to happen. I don't think that's something that they're just going to wake up one day and say, oh, the dollar is not the reserve currency anymore. I think it's going to be a slow progression. But, when you see Saudi Arabia and Russia dealing together, I mean, if you think about it, it's kind of crazy. Why would Russia want to go out and get dollars so they could pay Saudi Arabia? Why not skip the middleman and just deal in some other currency or their own currencies? But that would be really bad for the dollar and very good for gold. So I guess all I'm saying is there's a lot of things that could change, and that's one of the reasons. Even though I'm not really looking for gold to take off here in the next week or 2 weeks or even several months, that's one of the reasons you don't run out and just sell your gold off and speculate elsewhere. It's one reason you don't just say, oh, geez, I'm gonna wait and buy gold after it hits the bottom. Number one, you won't ever know when it hits the bottom. I'll tell you what happens most of the time, and this happens all the time. People will say, well, when it turns around and starts going up, I'd rather buy into the market while it's moving. But what'll happen is it'll go from let's say $1,150, it'll jump up to $1,200, and it's done that many times. So the first thing people think is, oh, well, that's just a normal fluctuation. I'm not going to buy in. Then maybe it goes up to $1,300, which it's done recently, and some people get excited and they'll buy in. And then of course it dropped right back down to $1,150. But at what point are you confident enough that it's a real move in the market? We saw this years ago when gold took a big dip and it was down around $1,000. And people, a lot of people thought that was it for gold. A lot of people, everybody has an opinion on it. But I noticed that the buying really didn't kick in until it got back to $1,500 to $1,700. So all these people that wouldn't buy when it was down at $1,100 or $1,000, they all jumped back in at $1,500 to $1,700. And, it did run up to $1,900 after that, but I can tell you very few people sold out at $1,900. So, they waited until the market showed direction, and it showed direction for several years, but then the market corrected, and they ended up buying at a lot higher prices by waiting. So, I see that all the time. I see it in the silver market, the gold market. People are afraid to commit. I think you just have to look at it, and I'm getting ahead of myself here, but you have to look at gold as more of an insurance policy at this point. I mean, if you're speculating in gold, that's a dangerous thing to do no matter if it's gold stocks or oil. But if you've decided that at some point gold's going up, that the dollar is going to be in trouble someday, you just buy some gold, you stick it away, and it's your insurance policy, because you never know when one of these outside crisis is going to affect gold, and then I guarantee you'll end up buying it at a much higher price than it is today. So the thing that I think confuses people in these markets is everybody looks at fundamentals. Oh, we're $18 trillion in debt, and they're printing money, and the politicians are lining their. I mean, we all know exactly why people look at gold. A lot of it has to do with perceived inflation or coming inflation. A lot of it has to do with the amount of debt we're in. And these are the fundamentals. These are the things that in the long run certainly should make gold go much, much higher. And if gold was reacting to fundamentals, I have no doubt gold would be $2,000 or $2,500 an ounce right now. But the fundamentals don't always tell you where gold's going to be right now. I mean, gold should be there, but it's not there. It's because gold's going to react to different market forces, and one is, as I keep saying here, it's a commodity as well as a financial instrument. And right now, commodities themselves are down in value. Everything went down. One of the reasons that things are going down right now is the Chinese equity markets. The markets in China are down something like 37% in 4 weeks. That's a huge drop in that market. And so, people pay attention to that. They're afraid that that's going to spread throughout the economy. It's going to spread to other areas of China. And what that would mean, of course, if the markets are down and money's tight, we saw what happened here. We had a depression or a recession, and business slows, demand for commodities slows. And so I'm simplifying this a lot, but I hope you get the idea. But that's one reason that oil's dropped so much. China is one of the biggest users of copper in the world. I think they use 40% of the yearly copper consumption is used by China. So copper's at a 6-year low right now. So commodities, it's simple. It's simple. If you don't need what's being produced, the price is going down, and that's what's happening. And gold right now is acting as a commodity, so it's just following the rest of the commodities, and it's come down right along with them. A lot of people would look at the equity markets in China collapsing like that and say, gee, that's a crisis, gold should go up. But when you look deeper, you have to look at what the real effects are. The same thing with what's happening in Greece. This is the third time Greece has come back for a bailout. And of course, the rest of the Europeans are a little skeptical on how Greece is ever going to pay back the money they owe, much less give them more money. And, it boils down to, again, I'm just simplifying this. I mean, I could go into great detail, but you'd probably be bored to tears, and I couldn't get it done in an hour. But basically, Greece borrows money, and they pay pensions, they expand their social programs, and they basically spend the money. They're not investing the money. They're not putting it into infrastructure. They're not helping businesses compete. They're not giving incentives for production. So, they spend that money and it disappears in social programs and things like that. Well, then there's no money coming back to the government to pay back the loans. In fact, I read that if you don't pay your taxes in Greece, they don't even come after you for it. So there's, I'd love to live somewhere where income taxes were voluntary. I don't think I'd pay I'd pay something because I'd feel like I need to pay something, but I wouldn't pay that much. So where are they going to get this money if they don't enforce tax laws? They spend their money on social programs. They've got no investment. They've got no investment with that money. So the rest of Europe is basically telling Greece that they need to cut back. They have to have a definite plan on how they're going to raise money, how they're going to pay back the money they already owe. And Greece apparently just isn't too open to doing too much. People vote for politicians that offer them more money, not less money. Same thing happens here. When's the last time a politician who said they're going to go in there and raise taxes and cut spending really got in and really did it? Everyone wants to vote for somebody that's giving them something and causing them no pain. And the same goes in Greece, and that's who gets elected. And that's how they ended up. I mean, again, simplified version, but that's how they ended up where they are. So if Greece does not come up with something, and Greece's goals and Germany's goals are not the same, and they have not come to any kind of agreement. On Sunday, they have another final meeting where Greece is supposed to have a concrete proposal. I don't know what they're going to change in the next couple of days, but that's going to be their last chance. A lot of people think that should have made gold go up, but obviously it didn't. We'll be right back in a second.
Once again, here's Nick Grovich.
Okay, I'm Nick Grovich back with you. We're talking about what's happened in the precious metals markets this week, and I was talking about Greece. They had a Eurozone summit in Brussels. Was it Wednesday? And they gave them a five-day deadline. They have to come up with a concrete package on reforms in return for another bailout. And, a lot of people expected that when nothing happened at that meeting, and again, the meeting on Sunday, that would be a very positive thing for gold. Well, I think most of the experts I have listened to or read about have said that, it's really going to be more Greece trying to kick the can down the road, see if they could just push the debt out farther, get a little more money, keep things current, and just keep pushing the debt down the road. I mean, let's face it, that's what happens 99% of the time. It happens here, it happens everywhere. Seems like nobody ever wants to pay off their debts. And so, really what's going on there, to me, it's not big news. It was the most likely scenario that Greece would not tighten their belt, and Germany, who's mostly in control there, would not want to give in, and they're going to have to reach some kind of accommodation. Otherwise, Greece faces going back on their own currency. They face being ejected from the European Union. That would be, I would think, horrendous for the Greek economy. I can't even imagine what it would take to go back on the drachma. I mean, even just physically printing up money and printing up and printing coins, much less the effects of being out of the European Union would send Greece backwards. But if you think about that, how much effect would that really have on the United States? I mean, I know there's a certain amount of trade, but it really wouldn't affect the United States all that much, and therefore a lot of Europeans, rather than buying gold, they feel very safe buying dollars. I mean, the dollar, when I looked yesterday, was at 1.09 euros. That's down from about 1.4 euros. I think it was actually 1.45 euros at its peak. So the euros dropped quite substantially. So if you're living in Europe and you want to protect your money, you could have easily put that money into dollars, which, like gold, are very easy to exchange when you need to exchange them. It's a form of insurance as far as they're concerned. Now, is the dollar great for the long run? Probably not. But for right now, you have to think as an average investor. Most investors want to buy into a market that's going up. They don't want to buy into a market that's been going down or is stagnant. Well, the dollar has been very, very strong for quite a long time. And really, it doesn't look like it's going to turn around anytime soon. So it makes perfect sense, really, for the Europeans especially, to be putting their money into dollars right now. They're getting into a market that not only is protecting their money, but it's actually appreciating against the euro. So to me, it makes perfect sense that they're not going into gold as much as they're going into dollars. They're going into a market that's moving in the right direction right now. Now, again, that could change any time, and if they're speculating, that's one thing. But I think most Europeans are probably doing that more for safety, just to hedge themselves on the depreciation of the euro. And certainly, if you lived in Greece, I think you'd be a little worried. I talked about these gold combi bars. They're a 50-gram bar. It's a little bigger than a credit card, but it fits really nicely in your wallet. And it's basically 51-gram gold bars. So each bar is worth roughly $40. And you can break off 1 gram at a time to go, either cash in for cash or possibly barter or trade with it. And we were talking at the office today, and I said, what a great time. If I lived in Greece, I'd have 3 or 4, maybe 5 of these cards in my wallet, And I don't know this for a fact, but I would think if you're paying in gold, you might get some pretty big discounts. The Greek banks have been closed for several days. The ATMs are open, but you can only get 60 euros a day out, which is about $66, and that's it. So imagine you're stuck there. You can't get your money out of the banks. The banks are in trouble. They don't have enough money. I mean, that's why they're closed. They're afraid they don't have enough cash. But if you had some of these combi bars or the little 1 gram maple leaf coins in your wallet, I would think you'd be able to barter and haggle and buy just about anything you wanted. And again, I can't say this is happening there. I don't know. But I would think gold is a universal money. It's worth the same amount in Greece as it is in China, as it is in Japan, as it is in the United States. So it's got a constant value. I would think if you had a bunch of these little combi bars, whether it's the whole 50 grams or 1 gram at a time, that paying in gold rather than euros right now, you probably get some discounts buying goods with it. So, there's another good reason to have 1 or 2 of those in your wallet. I have one in my wallet. I think it's great. Do I think I'm going to really need it? Probably not, but it's like a security blanket. It's there if I get in trouble. It's not something I'm going to spend unless I'm in trouble. It's not like having a bunch of $100 bills that here's 100, here's 100. Before you know it, there's no $100 bills left. It's emergency money. You're going to have to go to a little effort to actually spend it, but it's there if you need it. So, that's just one reason why gold still might be something that you'd want to have in your possession and have for emergencies. And that's really one of the best reasons to own gold. But the Greek crisis has failed to spur the price of gold, and a lot of people were expecting that it would. I think the people who were, here's the thing. I think the people who really thought this was going to spur the price of gold, they bought in before the meetings. So you had a lot of people that bought in anticipation of exactly what's happened, nothing, and when nothing happened, which is the news, gold fell rather than go up. So a lot of those people, that's pure speculation. They're going to, most likely take their losses or cash back out and sit on the sidelines. And I think that's why you didn't see a rush of buying after the meeting over in Brussels this week. The buyers had already bought, so after the meeting was over, there really weren't people left buying. They were left holding gold, which had not done really much of anything but go down $20. So, perhaps the worst happens. Perhaps Greece is kicked out of the European Union. Perhaps they go back to the drachma. I just don't know how much of an effect that really has on the dollar. It probably makes the dollar stronger, which really does not necessarily help gold out. And when you look at silver, silver and gold move pretty much identically. Silver percentage-wise took a much bigger hit than gold. Gold was down a few percent. Silver was down at 1.6 or 7%. I know on Wednesday or Tuesday it was down over $1 at one point, which is pretty big. But I think what you're seeing in the metals like silver, platinum, palladium, the industrial metals, they took a little bigger drop in price because they are really not pure commodities, but they're used mostly for industrial uses as well as being a precious metal. And I think the plunge in the Chinese markets really, really affected those metals a lot more than gold. So gold's probably a little more stable right now than the other metals. The difference is if we get a surge in the price of precious metals, you probably see silver, platinum, palladium percentage-wise do a lot better than gold. But on the downside, gold probably will react less on the downside too. So everybody's got different reasons for buying and different reasons for having metals, and that's one of the reasons it's really hard to just come out and say, oh, go buy this or buy that. Everybody has different goals. They're trying to accomplish different things with their portfolios. Some want long-term appreciation. That's going to be, I'd make certain recommendations for that. Some just want some safety, some insurance. That's going to be another, that's a little different. Some people do like to speculate. They are convinced gold's going up or platinum's going up or rare coin, whatever it is. And they know it's speculation. They know that they're making an investment, whether it pays off or not. So again, that's a whole different set of circumstances. So it's really hard to say, buy X or don't buy X. Everybody's got different reasons for buying, different reasons for holding. Platinum came close to $1,000 the other day. That's a 6-year low in platinum. Now, as you probably know, I'm a huge fan of platinum, and so far it hasn't done all that well. But I stick behind my platinum. I think when it moves, it's going to be a huge, huge move. The thing that's different about platinum and even palladium is that when the industrial use does turn around, when they do start needing that to produce cars and electronics, they just don't have a supply sitting there ready and waiting to go. With silver, there's a lot of silver around. I know there's reports about silver shortages. I think their numbers are incorrect. If we had a silver shortage, quite frankly, silver would not be $16 an ounce. It would be $40 an ounce. So what it tells me is the numbers are wrong. The numbers they're using are just wrong. And it's one of the reasons when you see silver move. When you saw silver go up into the $40 range, $48 range, a lot of silver comes on the market very quickly at certain price points, and that's why when you see it correct, it doesn't go down $1 or $2. It went down $20 because there's actually a lot of silver around above ground. It's just a matter of what price point does it come back on the market. Platinum and palladium, it's just not something that investors own a lot of. So even if the price of platinum went to $5,000 an ounce, there's really, in comparison to gold and silver, there's really very little in investors' hands. And there's really no stockpiles, no big stockpiles besides the ETFs, where at any price, anyone can get their hands on huge amounts of platinum or palladium. And that's one of the reasons that at the lower prices, I'm still a big fan of buying platinum and palladium when they dip. We'll be right back in a minute.
Once again, here's Nick Grovich.
Okay, we're back for the last segment. We are live today. If you have questions or comments, feel free to call at the station, 602-324-1510. It's always a lot easier for me if you call and ask questions. We've been talking about the metals markets today. I haven't been overly excited about urging you to jump into any of the metals today, which is probably bad for business, but that's where the markets are. A lot of people buy precious metals because they're worried about inflation. And one of the big things right now, especially with what's happening in China that we talked about earlier, with the expansion in China slowing so drastically and commodity prices falling, most people are more worried about deflation than inflation right now. In Europe, they're trying to increase the inflation rate. In the United States, the Fed's been more interested in trying to get the inflation rate up rather than worry about inflation. They're very, very concerned about deflation. So that's another reason why the precious metals have not done so well the last couple of years. Now, all that said, it only takes one catastrophe to turn things around. And when things turn around, precious metals go up very, very quickly. And so you have to ask yourself why, if you own precious metals, why do you own them? If you don't own them and you're thinking about getting into them, you have to understand in your own mind why you want to own the metals. Is it because you think you're going to buy and make a quick $500 an ounce? And I don't know, today may not be the time to buy, or it might, who knows? Something could happen in the Middle East overnight, and gold could be $1,500 tomorrow, but I don't know that. No one knows that. But I still firmly believe that China's going to come roaring back one day. I don't think it's going to be tomorrow. I think eventually all this debt that we're in comes back to us in the form of inflation. I do believe the dollar as a reserve currency is kind of something of the past, although again, I don't think that's going to happen. I think one article I read actually predicted a date in October that's going to happen. I only know this because clients call me up and they say, well, did you read this? It's going to happen on October 11th. The IMF is going to come out and do whatever, and the dollar's not going to be the reserve currency anymore, and gold's going to go to $5,000 an ounce. I want to tell you, nobody knows the exact date that's going to happen, and I've seen people lose huge amounts of money. I've talked about a local guy who spent hundreds of thousands of dollars because they use scare tactics. I was talking to a lady in my office yesterday. She had bought 6 $10 gold Indian heads in MS65 from a dealer. I don't remember how long ago, maybe 15 years ago. And they're worth about half of what she paid. And during our conversation, she was saying, she bought these. She thought they were going to be a good, stable investment. She thought because of the rarity, they would go up in price. And, her comment was she wished she would have just bought gold. Then she'd know what she has. Right now, the way it is, she doesn't even ever know what the coins are worth. So, she bought something, and she said to me, these coins have just been an albatross around my neck for all this time. So the problem is she just got an average coin. She didn't buy something that was so rare that the rare coin markets helped her out. She didn't buy something that's so common that it moves with gold. Those coins are worth roughly $2,500 a coin. They have $600 worth of gold in them. So, gold could go up substantially, and she still would not benefit by it. So it comes back to she had a goal in mind. She had a reason for getting into the gold market, but because she wasn't firm on her goal, or maybe she wasn't clear on what her goal was, she ended up buying coins that really had nothing to do with what she was looking for. They had more to do with the broker's commission than they had to do with serving her. In my opinion, they were the worst thing she could have, not the worst thing, but they were a terrible thing for her to buy for the reasons that she gave me for buying. So if you don't know the reason you're buying or holding, you're going to have a broker talk you into whatever he makes the biggest commission on. So one thing we like to do at American Federal is we like to talk to you and find out why you want to be in the markets. What's your reasoning? Do you think you're going to make a lot of money? Are you looking for something, just in case things get worse? Are you looking for something that's just a hedge or an insurance policy? And then we sit down. If you're already in the market, we'll do a review for you. We go through your portfolio coin by coin. We show you exactly what it's worth. If you come into the office or we come to you, which we do, we visit people privately at their banks or attorneys' offices or their homes. We'll show you how the pricing works in rare coins. We'll actually show you the certified coin exchange. That's the market that most dealers use when they're buying and selling coins. So we try and show you everything we can so that you know exactly where you stand, where the prices came from. I even have a program that it's taken me 20 years to get this program to where it is today, but we can compare one rare coin to another. We can compare rare coins to the stock market, to the gold market, to the silver market. So you could see how you would have done, had you invested in something else besides maybe the coins you have. Now, that doesn't always guarantee you that that's going to be the best thing for the next 5 or 10 years, but it at least gives you an idea, looking at what's happened the past 10 or 15 years to what might happen possibly the next 10 or 15 years. So we try and just give you a lot of information so that you have a good understanding of what you own, maybe why you own it, hopefully, and what the future might look like on the coins you're holding. The one nice thing about the precious metals markets being low right now is you don't have this sense of urgency. When gold was going from 1,500 to 1,700 and then 1,700 to 1,900, there was a sense of urgency. People felt like, they had to make a decision right away. They had to do something very quickly. And that's a lot of pressure. I don't know. I usually make bad decisions when I'm doing them out of fear or when I'm trying to do it very quickly, and that was more the feel of the market when gold was over $1,500. I think people did things very quickly. They didn't think about it as much. They just wanted to get in before gold continued going up because it was that kind of atmosphere. Right now, the nice thing about getting a review is you can get the information, you can think about it for a little while, you can take your time, and for us too, if we're making changes for you, we can take our time, we can sell your coins, get you the very best price. We can, if you're going back into gold, silver, platinum, we can buy it on the days it dips. So we have a lot more latitude to take our time and do things the right way. I mean, we always try and do it the right way, but you don't have that same pressure. When gold's going up day after day after day, it does put pressure on you to get things done quickly. So, it's a really good time right now if you have coins or bullion to get a review and find out exactly where you stand. And like I said, review your goals. Why do you own it? I had one client who's well into his 90s and had a huge amount of gold. And, I didn't make the decision for him. He made the decision. He said, Nick, I'm 90 X years. I think he was 95 years old. Why am I holding all this gold at this point? I'm 95 years old. Do I really care what's going to happen 10 or 15 years from now? So, in his situation, he opted to just cash out and simplify things for his heirs. And he kept, he did keep a certain amount of gold, but the amount of gold he had was kind of crazy that he had that much gold, since he wasn't doing it as an investment. He wasn't doing it thinking he was going to make a lot of money. So if you'd like a review, call our office. It's 480-553-5282. And I think I have enough time here to answer our last question, hopefully, if I talk quickly. The person that had three likenesses of himself on a coin is Abraham Lincoln. On the Lincoln cent, he obviously is on the front of the cent. Then on the back of the cent, they have a picture of the Lincoln Memorial. So that's Lincoln there. And this is the part I didn't know. Lincoln in the memorial is actually holding another cent. So he's actually on the coin, on the Lincoln penny 3 times. I didn't know that last part, so even I got stumped on that one. Well, I hope to see you next week. If you have any questions, call my office, 480-553-5282, and we'll talk to you soon.